Happy Saturday, ladies and gentlemen. Allincrypto here, and welcome back, guys, for another jam-packed daily market update. As always, we've got a lot to get into. We're going to be kicking things off with some confirmation in regards to what we've been talking about, that now is a generally bullish time for assets, certainly risk on assets, and we will be starting with the Nasdaq. It did go on and put in a new high. Remember, we think that there's a bullish backdrop given what we think is going to happen with the S&P 500. We think it's in a new bull market. We will cover that to start things off, and crypto as a beta of markets should enjoy the time period that we've got ahead of us. So we are going to be kicking things off there. We've got huge news out of JPMorgan, the infamous JPMorgan when it comes to crypto. We know that Jamie Dimon has been very hostile towards Bitcoin, but ironically, they're now going to allow institutional clients to use both Bitcoin and Ethereum as collateral for loans. This is huge. This is part of the kind of acceptance of crypto as an asset class. Talking about that, we will also be looking at Grayscale's digital large cap fund that's now launched over on the New York Stock Exchange. And then, of course, we've got huge news in regards to Trump's new SEC pro crypto Mike Selig nomination to become the new CFTC chair. Of course, Caroline Farm is the acting chair, and then we'll finish things off on a little bit of TA as it relates to Bitcoin and the space more broadly. Let's kick things off with the Nasdaq. And why am I showing you the Nasdaq? Well, you guys know that I believe we are in a generally bullish environment. I think earlier this year, it's been an interesting year. We actually had our bear market. And a bear market, when it comes to the traditional markets, certainly the S&P, is defined as a 20% plus pullback. And we've had that. It was 21 point something percent for the S&P 500. It's entirely engulfed that. And every single time that's happened, going all the way back to 1981, the markets have gone on, the S&P, and rallied for a period of the smallest being 395 days. Now, if we're to follow that blueprint, and the past 9 times, this would be the 10th if it completes, that this has happened, that's been the case. We don't bet against probabilities. If something happens 9 times out of 9, we go with that that's going to happen this time. And that's going to provide a very bullish backdrop. And we've been saying this despite all the fear, despite all the kind of catalysts, and there's always worries or reasoning with the markets to not put money in. But we've said that, look, it's going to be a generally bullish environment for assets. And I think the Nasdaq and where that closed on Friday is a testament to that. You know, you look at the UK market, for example, that's going higher. And I don't think through any kind of innovative reason other than the fact that, for me, assets are assets essentially have become Bitcoin in the essence that they are hedges against money devaluation. And this is the Nasdaq, and you can see this new high that the Nasdaq put in, continuing in its uptrend. Again, just to refresh people in regards to what we believe is going to happen for the S&P. Every time we've had a 20% plus pullback, going all the way back to 1981, and we've engulfed it the past 9 times, we've actually gone on and rallied for a period, this being the smallest one, of about 395 days. That's going to take us into sort of July next year. And I think that will throw the Bitcoin 4-year cycle out the window. And I don't think many people are expecting that or perhaps prepared for that. But we think generally for risk, we've got a good time ahead of us. I think the Nasdaq and where that closed, just to share that with you, is kind of a testimony to a lot of what we've been saying. Trump to nominate SEC pro crypto Michael Selig as CFTC chair. This is from a report. And this is David Sachs, who is the AI and crypto czar, chiming in on this. He says, President Trump has made an excellent choice in Mike Selig to lead the CFTC. Caroline Farm, of course, acting. And she's very pro-crypto. And that I think is quite obvious. As anyone who knows him will attest, Mike is deeply knowledgeable about financial markets and passionate about modernizing our regulatory approach in order to maintain America's competitiveness in the digital asset era. This is a matter of national security and the embrace of digital assets. There's a major unlock. We talk to so many people that actually are at the forefront of this, whether that's tokenizing billions of dollars as we speak in commercial real estate, in sort of the financial markets, you know, in emerging markets. We talk to people that are revolutionizing supply chains, fundamentally evolving money. And I mean, this technology is if you don't adopt it, you'll get, as Christine Lagarde would say, cannibalized by it. He goes on to say, Mike has not only been instrumental in driving forward the president's crypto agenda as chief counsel of the SEC's crypto task force, he also brings deep experience in traditional commodities markets from his time working at the CFTC under the chairman, Chris Giancarlo. And of course, we know what Chris has had to say on crypto, certainly Ethereum. There's a kind of ETHgate thing out there. On behalf of the president's working group in digital assets, Patrick and I look forward to continuing to work with Mike to deliver President Trump's promise to make the US the crypto capital of the planet. Interesting terminology. I'm going to show you guys some of the things Mike's been saying about crypto going all the way back to 2023. But before I do that, I want to sort of pivot a little bit and just really get people to think about all the major positions within the United States are all going to pro-crypto individuals. That should signal to you just how impactful the United States is certainly looking at this technology. And if you look at the internet, that race really should have been fought harder by other countries. And if a country doesn't fight that race, I mean, in the Bank of England, we're doing, or here in the UK, the Bank of England are doing trials as we speak with DLTs, including Hedera and others, Ava Labs, Chainlink with Aave, so on and so forth. There's a kind of digital initiative going on, or experiment, and they've been exploring this phrase. Every country is looking to embrace this technology, and you're on the cusp of it. And yes, I know there's doom and gloom days or lackluster days in crypto, but see the bigger picture. This is why we talk about charts on a weekly time frame, and we discourage anybody from trying to trade crypto. The reason being, I'm going to tell you straight, you're not going to make any money doing it. You're only going to lose money. Maybe you can prove me wrong. I hope you can. But I think the vast majority of people, 99% of people, are only ever going to lose money, and probably quite a lot of it with crypto. And we could be here pushing referral links and things like this. We don't, because we think it's in your best interest not to. But, of course, God gave you free will. Exercise it. These are some of the things that Mike has said. This is going all the way back. I fished some of these out. This is 2023. SEC or endgame is no doubt to force the developers of open source peer-to-peer software protocols to register as national securities exchanges and broker-dealers. An impossible task. This will only serve to drive DeFi offshore. So this is 2023. This is Gensler's reign. And he was pushing back on it as a member of the SEC back then. So this is a very pro-crypto individual. This again is, which one came first here? The chicken or the egg? That's the question I'm going to ask you. So this came sort of second. This is another one. SEC Gensler says, bearing in mind, he works for the SEC at this point, every crypto asset other than Bitcoin is a security. SEC FinHub heads said today at the CFTC MRAC meeting that most crypto assets are offered and sold as securities. Small difference in terminology, but huge difference in regulatory applications. And of course, the fact that he's going over to the CFTC, which we now know that cryptos are commodities, that the vast majority, of course, if you use cryptos to tokenize securities, then they are securities. They're kind of crypto assets, but they're not the underlying sort of infrastructure cryptos. But most cryptos are going to fall under the CFTC. And of course, Mike, somebody that's been very pro-crypto, even during when the boss of the SEC was against it, is now going over to head it. And this is a more recent tweet back in November 2024. Whomever President Trump appoints as SEC chair must take a do-no-harm approach to the regulations of crypto asset markets and encourage technological innovation within the US. This can be done through exemptive relief, safe harboring, and end to regulations by enforcement. And this is an individual that's been sort of, I guess, putting his neck on the line, so to speak, in regards to crypto for a long time. And I'm personally happy to see him helm the largest regulator of crypto assets, being the CFTC now. And of course, Paul Atkins is the SEC securities. So they're going to deal with the kind of usage of these commodities being cryptos that he'll have reign over now, Mike Selig. And it's really part of this sort of trend that we're moving on. You know, crypto is a major trend. I want people to be a part of that. Every generation has an opportunity. Crypto's ours. People look at people that bought crypto in the same way that they looked at, boomers buying houses. What are you going to tell your grandkids in regards to the world that they live in that is entirely enabled? You know, they're all going to be using crypto without even knowing it. What are you going to tell them? That you just didn't see this coming? You couldn't stand the volatility? Oof. Men have to look themselves in the mirror. And so do women, of course. No sexism here on the channel at all. JPMorgan, to allow its institutional clients to use Bitcoin and Ether as collateral for loans as crypto continues to get absorbed into Wall Street's plumbing. Nice scoop from Emily J. Nicole. Shout out to her, by the way, for this. And yet another example of life moves pretty fast. How ironic, right? It's a 180 from JPMorgan that said that there's no intrinsic value to Bitcoin or Diamond. I should, shouldn't penalize the whole company for what their CEO said, although he's a reflection of it. He has previously said that there's no intrinsic value to Bitcoin. He doesn't see it as valuable, and he likened it to smoking. He said it's akin to that, and I think that was a bit harsh. I think we can all agree on that. But I think one thing that I've had to humble myself with in the markets is that beauty's in the eye of the beholder, and if something is valuable, it's valuable. Doesn't matter whether I think it's valuable or not. There's lots of things I think are stupid that are valuable. Meme coins are kind of, I'm not the biggest memer out there. But if people want to invest their money and buy it and drive the value of it, then it's valuable. And, me coming out in 2020 and saying, look, guys, I'd stay away from Dogecoin. It's literally a meme. And then Elon Musk literally pumping it to the moon, it being one of the best crypto performing assets. You have to recognize your flaws as a human being. And certainly when you're wrong. Anyway, JPMorgan Chase & Co. plans to allow institutional clients to use their holdings of Bitcoin and Ethereum as collateral for loans by the end of the year in a significant deepening of Wall Street's crypto integrations. I do think this is going to extend more further, but they have to tread carefully. The program offered globally will rely on third-party custodians to safeguard the pledged tokens, according to people familiar with the matter. It builds on JPMorgan's earlier move to accept crypto-linked ETFs as collateral. As JPMorgan spokesperson declined to comment, the expansion underscores how quickly crypto is being pulled into the financial system's core plumbing. With Bitcoin rallying this year and the Trump administration rolling back regulatory hurdles, major banks are starting to bring digital assets deeper into the lending system. And again, this is part of the institutionalization of crypto, or the acceptance of this as a new asset class. And I think Bitcoin has that acceptance. Ethereum is getting that acceptance. It's going to trickle down, and there's a kind of hollowing out of the crypto markets that's going to take place as a lot of the nonsense that's here will probably disappear, and the things with real usage and utility and a global impact will reign supreme. And you want to try and pick those out. You want to find out what I hold, do become a patron. Talking about sort of acceptance of this as an asset class, it's a big day for crypto at the New York Stock Exchange. We're honored to celebrate the launch of Grayscale's Coinbase crypto 5 ETF ticker, GDLC. We did look at this with other ETPs to suggest where the broader crypto market's going. We'll have to redo GDLC again. The first multi-asset crypto fund in the US by ringing the opening bell at the New York Stock Exchange. Proud moment for the entire Grayscale team. Well done, Grayscale, by the way. We looked at a number of ETPs as a barometer for where we think the crypto space is going, and we've still got higher targets for these. One of the few people to get this perfectly right from the sort of bottom and use that to be bullish on the space as a whole. GDLC. Here we go. Yeah. So we did have a lot of work on this, and we still do have higher targets. This looks perfect. We had a falling wedge here, so on and so forth. But when it comes to the broader crypto space, guys, this is just consolidation before continuation, in my opinion. And I do think we get there, and I do think the broader space is literally on the cusp of breaking out into price discovery and new all-time highs. It's a very exciting time to be alive, and I think the thing that I'm most sad about that's happened in the past couple of weeks is that retail got flushed with that $20 billion liquidation event. Exchanges, I think they get away. They've gone on away with it, to be honest. And there's no point in. What can I do about that? Nothing. But I other than sort of educate people in regards to not using leverage and being careful who you listen to. I think there's a blame that should be cast on certain individuals for sort of leading their followers. Certainly promoting the fact that they trade. Like I see some people putting like 75x leverage trades on. Show me the money. Show me you make money doing that, and no beefs. Nobody does. And that's the reality of this game. It's fake. It's like the fitness industry. They're selling you these physiques I work out every single day, sometimes multiple times a day. Look at me. Now, diet, I've got to admit, I slack big time. And I've got my vices like everybody. But it's akin to most other industries. All that glitters isn't gold. And hopefully we separate ourselves here on the channel in regards to just being as real as it comes. And telling you as it is. And as somebody that's made a lot of money off of this industry and continues to make money off of it. As an investor, we're here to share what we know and hopefully change people's lives in doing so, and spot the bigger trend and transformation that's taking place. Ladies and gentlemen, that's it from me. I'm going to love and leave each and every one of you. It's always a pleasure. I missed you guys yesterday. I hope you missed me, and I'll see you all in this evening video and tomorrow's daily market update. Thanks for watching, guys. See you soon.